All right, all right. Thank you so much for tuning in to the weekend wrap. My name is Corey. It is June 6th, 2021. Let's take a look and see what's going on in the markets. So, in the news for this past week, another cyber attack took down JBS, which is a major meat plant that processes more than a fifth of the nation's beef supply. President Biden is considering all options, including a possible military response. If you recall, recently an oil pipeline that provides 45% of the fuel for the East Coast was also attacked in a similar situation. Possible edges in this type of so a possible edge in response might be a play on the institutional cyber security sector as well as defense contractors. This is more long term. And short-term supply and demand fluctuations in commodity prices such as oil, and pork bellies, lean hogs, that kind of stuff. JP Morgan also reported that they are freezing donations to Republicans who contested the 2020 election, according to an internal memo reported by Reuters. I noticed that I think Bank of America and Morgan Stanley also paused donations as well. However, I think both of them have resumed, and JP Morgan is the only holdout, so to speak, thus far, but we'll see where things go from here. As far as key factors to watch this coming week are inflation that might be exuded by the core CPI data for May. So note that much larger than expected numbers for April sparked a massive sell-off, as many worry that inflationary pressure will force the Fed into unwinding stimulus. Friday's job growth picked up from the previous month, as did wage growth, which suggests that inflationary pressure may be more persistent than transitory. So the reason or the justification behind that essentially is that if people are making more money, so when there's inflation, wages go up. And that means that there's more money in the economy, more money in the market, so to speak. And because of that, inflation can be more withstanding than just like a transitional thing. A possible edge in response, so shorting treasuries because bonds hate inflation, as well as equities. Again, inflation degrades bond returns, and equities are likely to fall if the Fed raises rates. Also, shorting the USD. And I missed the last part of my sentence here, but yeah, inflation degrades the value of the USD versus other currencies. And if you haven't been paying attention, so meme stocks have been running wild, with AMC having gained more than 80% last week, despite falling more than 6% on Friday. So AMC, which was on the verge of bankruptcy, has taken the opportunity to dilute its shareholdings, completing 2 share offerings in the last 3 days. Note that among AMC's largest shareholders, none of the funds are actively managed, meaning that any sign of weakness could rapidly liquidate longs. So, again, I believe it's the top 20 shareholders for AMC. None of these are actively managed funds. They are buy and hold funds, essentially. So the run up, again, it's probably not institutional, and because of that, if the volume starts to taper off, and it will, you're going to see a very big, the bubble is going to burst, basically. So possible edge in response, so shorting AMC when the bubble bursts, dip buy for long-term holders. So when it overcorrects, basically, that's when we look to get in. Also, negotiations between Democrats and Republicans regarding Biden's $1.7 trillion infrastructure plan will have a key benchmark tomorrow. Industrial and material stocks have gained around 20% since the start of the year, respectively, and a possible edge in response. So sell-off in industrials and materials if a large spending bill fails to materialize. So I wanted to mention this. This is AMC in a nutshell, and this this curve that you're seeing right here is called the Gartner's hype cycle methodology. So, albeit this typically is going to pertain to a very big change in like productivity or reduction in regulation, something like that. In this instance, um, the innovation trigger was, there was no innovation trigger other than investor expectations that the short squeeze would drive up prices. So essentially, this expectation is going to lead to inflated expectations of performance, particularly in the face of poor fundamentals and diluting shareholders. So this is going to lead to a strong correction when common sense takes over and all the juice has been squeezed, so to speak, and weak hands flee in mass. Deflated prices will allow long-term investors to re-engage at lower prices and slowly grind higher when normal business performance improves. So basically, we can see we have this innovation trigger, which is the short squeeze. We have a peak of inflated expectations, so we have a whole bunch of people buying that have no business doing so, basically. And then we have the trough of disillusionment when, again, the bubble bursts, basically, and you get a massive sell off because nobody wants to actually hold this thing. And then eventually, things will come back into balance. So, all right, here's what's on the calendar for this week. So, Monday, nothing major. Tuesday, we have JOLTS job openings. So, that marks job creation across a large number of employers. Wednesday, we have crude oil. Last week, we had a very big draw at minus 5 million barrels. Thursday, we have the core CPI month over month for the month of May. So in what was that? April. So you can see it was 0.9%. We have 0.4 forecast, but we'll see what happens. But that's really going to be the one you're going to want to pay attention to. Like I said, that could potentially affect bonds. It can affect gold. It can affect equities, affect the U.S. dollar. A lot of things, so we'll want to pay attention to that one for sure. Also have initial job lists on Thursday. Friday, nothing major. We don't really have any big earnings this week, and so Monday supposedly showing Marvel. I'm noticing on investing.com there are some companies that I'm not sure exactly why, but they seem to have them like on multiple weeks. Like they'll be scheduled for a 1 week and then they don't report and then they're on the next week, or sometimes 3 weeks in a row. I'm not sure what quite is up with that, but I know they do have Marvel set to report on Monday, tomorrow, and then Campbell Soup on Wednesday. Both of these guys had been listed to report previously. I'm not sure why they're still on the calendar. And as far as IPOs go for this week, so Thursday, of course, is the day when all IPOs are listed. So we have Monday.com. They are a business software company. We also have LifeStance Healthcare, which is like an online therapy company. Marqeta Inc. They are a card issuer, payment processor. Zeta Global Holdings, marketing company. First Dibs Inc. That's an internet retail company, and Taskus Inc. They do they do business type services, but they do it remotely. So, all right, here is the sector analysis, and you're going to notice that the chart is quite a bit different this week. So the reason I did that is so we can identify trends. My whole stance this video is I'm trying to convey information in a way that is useful to you. So it's not just us kind of going through the motions. You're actually finding possible setups, and you're garnering information that is going to help you make better, more informed trading decisions. So that's what this is all about. So if we look at the red text here, so gold prices as well as gold miners receding relative to last month. So we can see on the left-hand side here on this heat map, this is last month. So you can see in the past 30 days, gold has been very strong, as shown here on GLD. in here for the miners on GDX and GDXJ. You can see last week gold was not doing so hot, both the commodity as well as gold miners. Apart from that, EWZ, which is a brilliant ETF, is still showing very bullish. The past month, up 15%, and then last week, an additional 9. Also, solar, the ETF TAN, is receding relative to last month. So this is, let's see, yeah. So this is TAN right here, and it was fairly neutral. It was neutral bullish. But you can see that it actually is in a fairly strong decline right at the moment. So I don't know if it got a boost because of the infrastructure plan, and then started to recede because of I don't know, supply chain issues, or if it is possibly because the infrastructure plan, the initial response by Republicans was laughable. I don't know, but anyways, that's going on. Energies continue to drive higher, but it may be approaching a level of exhaustion. So this is going to be inflation dependent, because that's been what's been driving the commodity prices the most. So last month, you can see XOP up 13.4%, still running really, really strong. Oil is, I don't know what the all-time high is for oil, but I feel like we're probably close to it. I think we're over $70 a barrel, 73 or something like that, if I remember correctly. Yeah. Anyways, we're getting close to the 2 standard deviation mark. I believe on the, I think it was the daily chart, but anyways, just keep an eye on that. Oil's strong, but it's been going strong for a while. And then last but not least, healthcare and consumer cyclicals continue to decline. So this is going to tell us, it suggests that sentiments are still risk on. Usually healthcare and consumer cyclicals are what people flee to in times of economic distress. And you can see that they are in the red. And the indexes, all the major indexes are still going strong. So, anyways, just, sentiment is still risk on for now, but, things can change at the drop of a hat, particularly with the inflationary climate. All right, so I didn't get a chance to see too much of the session here on the S&P, but I was able to catch the first couple of hours. So we opened up within Friday's range, and activity has been relatively lackluster since. At a minimum, we are remaining in balance, suggesting that, albeit it's primarily day time frame traders, biases are still long. So when I mentioned that it was day time frame, it's just us kind of chopping around on low volume. There's no big money, at least coming in just yet. But we are holding the POC, and last time I checked, it was starting to look a little bit more bullish. So we'll want to keep an eye on that. But as it stands, this high volume node was holding, at least when I took this around 5 Pacific. So yeah, the lack of strong selling infers confidence to the upside, and that's kind of what I have another video where I talk about how, like, often what the market doesn't do is more, what it doesn't do tells you more important data than what it does. And, the fact that, we weren't selling off, we weren't breaking below the POC, remaining in balance, that tells us that, more than likely the longs are, it shows that they are fairly confident to the upside, at least so much as will remain in balance. So Jim Dalton did tweet on Thursday and Friday that the 2 double distribution profiles suggested that players were highly speculative. However, it would be easy for the long time frame traders to engage and quote unquote run over potential shorts. That's because we're right on the edge of balance, which you'll see here in a moment. So my immediate bias is long, and I'm looking for a potential break of Friday's high. What happened there? Okay, so my PowerPoint's freaking out. Sorry about that. All right, so here is the 1 hour chart. So you can see this is the range we've largely been stuck in right now, and this is where we're currently trading at. This red line up here is the all-time high, and I marked the low volume node up here. This is our supply zone. Low volume node here. This is our demand zone. Yeah, basically this high volume node is, um, there's gonna be a lot of people positioned in this areas, and a lot of shorts were trapped on Thursday and Friday when this thing broke out as strong as it did. So I'm looking for potential longs to come in and just drive this thing through, trapping out all these shorts. We'll break out a balance and then move into price discovery. So I just noticed that I forgot to change that. So ignore everything that was said on the left over here. Sorry about that. Okay, so this is the longer term chart. So you can see we've largely just been consolidating for the past, 3 weeks, month, something like that. And we are looking for a potential break of the all-time high and break it into new area balance. So that's kind of what I was talking about. Like, it'd be really easy for the longer time frame buyers to come in and just run these guys over. I know Jim Dalton said that because of the double distribution profiles, it doesn't bode as well in terms of like very large, the deep pockets traders, so to speak. Just because double distribution profiles are, albeit they're trending, they are weaker. So he was saying he was gonna wait for confirmation until we totally broke out, but we'll see. Anyways, so we're right at the midline in the linear regression channel, so that's good. We're still near the average. That means we've got plenty of room up above for continuation. So I'm looking for a potential breakout, and my line in the sand is the bottom of this range right here around 4160, where this green zone kind of runs out. So, all right, here are my trade ideas for this coming week. So this is Coupang. It's a Korean company. It's a lot like Amazon. The reason why I chose these guys, so if we look down here, so BlackRock put on, this is the biggest of BlackRock's new position. If you don't know who BlackRock is, biggest hedge fund in the world, $3.4 trillion under management. So they put on a fat $1.8 million position in this company with 2.2% ownership. Average price paid was $49.35. So they probably bought right when they IPO'd. And this thing got driven up, and then we had long liquidation. So I don't know if BlackRock is averaging down or if they got out of this position or what exactly. In any event, we are approaching a demand zone, and this has it's just poised in the perfect area to put in a higher low. Basically, we've got this low volume node right here, so I'm looking for this area to get bought and us to start trending higher. So this would be a very good buy point. We are well below the POC and looking for us to come back up here into balance. So this is a discount, longer term play, more of an investment type grade trade. So anyways, and that's a daily chart. So this is also a daily chart right here. This is the spider. These are the spiders. This is the spy, whatever. All right. So given the likelihood of a breakout, I'm looking for a potential break above the all-time high at 422.92 and continuation to the upside. So again, we're like right at the midline for the linear regression channel. So I'm looking for us to come up to the 2 standard deviation mark up here. Since we're breaking out of a major area of balance, it increases the likelihood that we will engage activity across all time frames, including larger institutional players. My bias is long with a potential test of the upper channel line near 440. All right, and last but not least, we have Ashford Hospitality Trust. So this is an REIT that deals specifically with luxury hotels. So since early May, it's been pushing up on good volume and has since broken the previous pivot high near $6. Both volume and price action suggest we may break out of balance with a potential retest of the previous bracket high near $9. So you can see we just barely took out this previous pivot high right here around 6, and I'm looking for buyers to come back in and continue the grind higher. I mean, you just look at the comparison for volume. This is when our economically things really started to pick up and improve. And we are approaching the summer months, so people are going to want to travel. People are getting vaccinated. Yeah, hopefully the hospitality sector will start picking up again. And if we get a break out of this range down here, we can get back up into this previous area balance. And, it suggests that we will conduct trade in this area where we were conducting previously. So I'd looking for a potential target of $9. That said 1 hour. That said 1 hour, but this is a daily. Sorry guys, I gotta stop doing this while I'm working. All right, so my immediate bias for the S&P is long, and I'm looking for the market to be primarily risk on for the coming week. Primary catalyst to monitor are notes from negotiations regarding Biden's infrastructure plan, which will be coming out tomorrow, and the core CPI reading set to release on Thursday. Again, we'll want to pay attention to industrials and materials as they will react accordingly, as will gold, bonds, and the U.S. dollar, as well as equities, of course. Meme stocks may see long liquidation and trap out thousands of retail investors this week, so keep your eyes on AMC, BlackBerry, Workhorse, and more. We may also want to anticipate a possible shift in inflationary, if inflationary figures are bad, from risk-on products into healthcare, cyclicals, and value. So just keep an eye on things. We're in a very weird situation, very weird time economically. So the market's just went from being extremely poor to the Fed coming in with an extremely heavy hand and propping up the market, and now we're starting to reap the consequences of that that support program. And although it got us through the funk, this is to be expected. And I do think that inflation is just, I don't know. I think we will rough it out. The market may react strongly, but overall, I think the economy is gonna catch up, and we'll be all right. So in any event, good luck, guys, tomorrow, and yeah, don't forget to pay attention to CPI. That's really the one to mark your calendars for. But other than that, I appreciate you tuning in as always. Thanks so much, and I will catch you next weekend. Take care.